Hi, everyone. Thanks for joining us today. The purpose of today's workshop is to do a deep dive and get very specific on budgeting, getting out of debt, improving your financial life. It's very important to get the basics right so that you can build your lifelong wealth. But again, some of that can be very challenging. So again, we want to be really specific today about the key things that you can do. I'm going to call to your attention first the advisory team. All of these folks are available to you. My name is Tim DeSetti. I'm there in the bottom left corner. Any one of us, I think at the end of today's workshop, we'll share with you a link to our calendars where you can schedule with us directly, because this information today hopefully will be very good, very helpful, but it's going to be more helpful if you sit down with us and let us guide you at no additional cost. We can guide you on the specific steps to make some of these things work for you. Again, when we think about planning, we think about the basic priorities first. The most important things you can be doing are, number one, establishing an emergency fund, beginning that savings strategy, utilizing a health savings account, of course, participate in the company 401k and maximize by getting the most company match you can get. And then again, moving on to the middle section where you would pay off high interest debt like student loans or credit card, etc. So again, the base of the pyramid is where we're going to focus today, because those can sometimes be the biggest challenges. I've always find that it's very, very difficult to live on a budget. If you are a budgeting type person, you definitely should try to do that. But I'm going to share with you some specific ideas that if you're not a budgeting person, that will help you meet your goals. Number one, of course, a budget helps you stay on track with your spending. It can allow you to set up and achieve other goals beyond just your basic needs. It prevents us from spending more money than we have if we stick to our budget. And then, of course, long term, it's going to provide financial security. And it's definitely good to build good long-term habits. But again, like I told you, I've tried a budget when I was younger. It was very, very difficult. Most people, I think, find it difficult to follow a budget. But here are a few of the things that I've learned that really can help you manage your financial situation. If you remember nothing today other than this one specific thing, I want to tell you this is the most tried and proven technique that I've found, which is to set up your paycheck. Each time you receive a paycheck, divide that at the bank where you deposit your check, divide it into a needs and a wants account. Okay, this simple behavioral technique, what you do is you go through your monthly budget and you take the things like rent or mortgage, insurance, internet, utilities, perhaps your cell phone bill, groceries. Again, there are probably 6, 7, or 8 things that have to happen every single month. We have to live, we have to eat, we have to keep the lights on. Maybe a car payment is in that because we have to have transportation to and from work. Okay, set up those things, put those into one account. Let's say that amount is $2,000 a month to pay for all those things. And you get paid $3,000 on a particular paycheck. What I want you to do is take that $2,000, put it into the needs account, and then I want you to have TM Holdings. I want you to have them separate that additional $1,000 into a separate savings account and you're going to call that your wants account. Everything in there, are things that you want to do, and maybe they're things that you need to do, but they're less frequent occurrence than monthly. You don't necessarily have to break it apart into two separate bank accounts. Some of you on bullet point 2 here are familiar with the envelope method, where you take your money, you put it into different envelopes to pay for groceries, to pay for insurance, to pay for perhaps childcare expenses or something of that nature. That is a form of budgeting, but I want you to really focus on either at TM Holdings, have them separate your paycheck, or once your paycheck is in your bank account, you can also then set up an auto transfer. That's what I did. My paycheck goes into one account, but then it's divided at the bank through an automatic transfer into that second account. Okay, here's a visual of the exact same thing. This goes one step further. On the far right is that needs account. In other words, this is everything that's essential on a monthly basis. On the far left is your spending account. And these are all, again, just discretionary things that they come about. These might include going out to eat or vacationing or, doing things that are just outside the ordinary. And then if you can master those two accounts, you can start to build and maybe set up a third account, which would be savings for the long term. You can go beyond that. Once you get good at separating your paycheck like that, maybe you set up a third or a fourth account to pay off debt, save for a vacation, or, let's face it, the holidays and year end, that can be a time at which we spend more than we normally do. So maybe you want to prepare ahead of time. So again, I'll go back one slide and say, hey, look, first things first, set up the expense account and the spending account. And then maybe we can progress to a third account to meet another goal. Okay, again, I'll emphasize to you that I have seen numerous families do this, and there's a behavioral change. It makes you much more conscientious of what you have to spend and what you get to choose to spend. Okay, this can be very effective. Once you've done that, the next step is to find ways to then manage or reduce your spending on unwanted or unneeded items. I do this myself. This is the methodology that I use because, look, we are all guilty of this. Every given month, if we were to go back and look at our situation and study our spending, so again, either what you spend in cash, what you spend on a credit card, or what you spend out of your checking account or debit account, I would encourage you to go back and highlight those things and make an active decision about whether you needed to do that, whether you could have lived without it. In other words, the needs we have listed in green here. The yellow items are areas where, well, we probably could make a change there. Maybe it's a questionable spend. And then certainly the red are areas where I go back to my own spending and I say, hey, you know what? I really did not need to necessarily do that. I want to change my habits. I want to, maybe I want to cancel my Netflix subscription. Maybe I have a gym membership that I'm not utilizing. And so I either need to use that membership or I need to lose that membership. So again, the key is go back, evaluate your own spending, and then make adjustments so that you're being more conscientious about your decisions. At the bottom bullet point here, a financial fast, maybe that's a great way to get a jump start on improving or reducing your spending. Set aside, start with a week. Maybe you set aside 1 week. Let's say it's this coming week. And what you do is you don't spend any money for the entire week unless it's an absolute necessity. Obviously, we put groceries, we put gas in the car. Those things are necessary. But we're not going to buy anything on Amazon. We're not going to go out to eat at all. We're not going to go to the movies. We're not going to go to Starbucks. Okay. So start with a week and give yourself a mental boost. And then if you can do that for a week, then set aside a new goal to maybe do that for a month. And then again, by reviewing your savings, by setting up your savings in a split account, by reviewing your spending and exercising some fasting weeks or months, I think you can really change the direction of your financial situation. Here are some other creative ideas that other advisors and that I've learned over the years. Obviously, on the far left here, credit cards. It's an absolute scientific fact that if you use a credit card, you're going to spend more money than you would if you were spending cash. The reason being, the simple act of purchasing anything without that physical exchange of cash releases chemicals in your brain that make it less painful or more enjoyable, however you want to look at it. But again, credit cards are a simple way to make a change in your situation. Um, I remember it's been a few years ago, but I remember that I got motivated one month that I was really mad about the fact that I broke the screen on my iPhone. And I didn't have insurance on the iPhone and I didn't want to have to go get a new iPhone. So I literally went to YouTube and I successfully replaced the screen on my phone. I think it cost me $12 to buy a new glass screen, and I literally, I don't know that you want to do this. I never did it again because it worked, but it was harder than I expected. But YouTube is an amazing way to be able to find fix-it solutions. Maybe you instead of buying gifts for someone, you can create a gift. I had someone share with me recently that they no longer buy cards for birthdays, Christmas, or holidays. They do a handwritten letter instead of a card, and their purpose. And I think they were right. It was more valuable to the person receiving it than a store-bought card. And with the price of cards these days, I definitely think it could save quite a bit of money. On the third bullet point, if you're paying for your auto insurance, your homeowner's insurance, or some of those things on a monthly basis, look to move that to quarterly. There's a courtesy fee on those by paying monthly. And so you can reduce the cost by moving to either quarterly and even further by going to annual payments. Again, it comes back to preparing. So maybe we need to separate our needs and wants first so that we can build up a little bit of savings to make this goal accomplished. But you will definitely save money by moving to a quarterly or annual payment plan. And then finally, there's groceries, utilities, things like this that occur every month. Definitely you should be more conscientious about that. If you've made the investment to move to, more energy efficient, either appliances or light bulbs here I've mentioned, program your thermostat, be active about taking advantage of ways to reduce those monthly spending. If once we've split our paycheck, and once we've done what we can to reduce our spending, if you still find out that you're short and you're not meeting your long-term financial goals, then I would encourage you that the next thing you can do is change your income, right? If we can't change our expenses, we need to change our income. I cite a statistic here that 45% of Americans have a side hustle. I still to this day meet with probably over 500 401k participants a year. We talk about their individual situation. I can't begin to tell you how many people are. One of my 401k participants just a few weeks ago mentioned to me that what they do is they teach a morning class, a fitness class in the garage of their home. And they have like 12 people paying them a small fee each month just to help work out as a group. And this person organizes a workout. Probably the most common side hustle these days is Uber Eats, Uber driving, DoorDash. I have a number of 401k participants. I mean, I can't tell you how many dozens of 401k participants have come to me and said, hey, when I get off of work or before I go work in the morning, I do an hour or 2 hours of DoorDash or Uber driving just to make that additional supplemental income. You'd be surprised how much people are making. One of my 401k participants shared with me recently that they work from home and their neighbor does not work from home. Their neighbor is required to be in the office every day. And the neighbor was spending money to have their dog let out or taken to a doggy daycare on a daily basis. And so they got together and said, hey, look, I work from home. You have to go to work. Why don't you pay me half of what you pay? And when I walk my dog, I'll walk your dog. And the ultimate win-win situation. One family saved money by not spending as much. And this particular client made money because they were, and they did by doing a favor for their neighbor. So again, I'm probably hitting that a little too hard, but there's lots of opportunities there to increase your income. One of the tricks that I've learned from a 401k participant is that they artificially have more taken out of their paycheck in the form of tax withholding, so that their tax refund each April is a little bit larger. And then what they do is every year they use that larger tax refund to make sure that they're paying down debt, and or they use the leftover money as their vacation each year. Again, so it's just a mental trick. I would say that's not as good as setting up a savings account and being more disciplined with your savings. But if you need the IRS to hold your money for you just to keep you on track, well, I mean, by all means, it's an effective technique. So we've talked about reducing our spending. We've talked about increasing our income and separating our investment, our paycheck. Let's say that you've gotten in this situation where you do have some debt. I want to separate the fact that there's good debt and there's bad debt. Good debt is like using debt to purchase a home, maybe using debt to purchase a car. These are necessary things we have in life, and we can obviously be better off financially by having a home in most cases, and we certainly need a car to get to work, most of us. So if we have to take on that good debt, that's one thing. But there is also obviously bad debt. Bad debt is using debt to obtain anything that goes down in value. Obviously, short-term purchases for clothes, gifts, things that we typically purchase on Amazon. If we're going into debt to purchase those things, I would contend that it's probably a bad debt type of item. So number one, think about what you're using debt for before you go into debt. And if you do have credit card debt, this would be one of my other calls to action. I'd like you to take time and schedule a meeting with us so that we can talk through a strategy to get that credit card, student loan, or other bad debt paid down. There are two highly talked about methods. You can look on the internet and read all about these. One is called the snowball, and that focuses on taking a small debt, paying off your smallest debts first, so that you build a behavioral momentum, i.e. snowball. Start with a small, build that up to larger so that you can build momentum. I happen to prefer the avalanche method, which is focused on taking the highest interest rate debt you have and attacking that debt first. Again, I think over time, you'll overcome debt faster by paying the most costly debts, but I do understand that there's merit in maybe a snowball method. So again, reach out to us. Let's talk about the two different techniques, and then we're going to focus on that first and most important step when it comes to debt. And that is that we have this worksheet. I'll be happy to share this with you again if you schedule time with any one of the advisors on your team. But what we would do first is we would list your debts first. We would list them by their balance, by their interest rate, and by the mandatory payment that you have to pay each month. That's those first three columns. Okay? And so you can see in this example, this person has two debts that we want to get tackled. And these are short-term, what we would call bad debts. The credit card is at 6.5% interest rate. The student loan is a higher debt, but it's at a higher interest rate. So under the snowball method, what we're going to do is we're going to attack that credit card first. It's not the highest interest rate, but it certainly is the smallest debt. And if we can get it paid off first, we can build momentum. If you prefer the avalanche method, then what we would do is we would pay only the minimum payment on the credit card in this example, and we would put all of our force and effort into paying down the highest interest rate debt so that it costs us the least total amount of money to pay both of these debts off. So again, step one is fill out this worksheet. We're happy to help you with that. Again, set up a meeting, and then we can talk about which methodology to use to attack these debts. I hope today you found some of these ideas helpful. I would strongly encourage you, and that's why we list the very first item here is www.infinitoskc.com/TM-holdings. Copy that, take a photo of this on your phone, Go to this particular website. What it's going to do is take you right to our calendars and schedules so that you can set up some time with us. Then we can walk you through and we can help you with the steps to set up and separate your paycheck. We can help you with the steps to fill out the credit card worksheet. If you'd like us to go through some of your spending with you and talk about creative ideas on reducing your spending, anything you'd like us to do, I think we want to partner with you. And I think we can, the two of us together can definitely make more progress than just you on your own. There's no additional cost for these services. We'll work with you and do whatever's necessary to get you on your way. And then I would finally call your attention if you would do me a personal favor. This QR code on your screen will take you directly to a financial wellness survey. It'll take you about 7 minutes to complete the survey. It's completely confidential to you and to me. This is not shared with the company, but we do use the overall results. We've had over 40 people from the company fill out this survey, and it does give us a lot of valuable information about what's both personally important to you and collectively important to you and the other employees about, whether it's savings, 401k, investing, debt payments, student loans. This gives us the data we need to be a better advisor to you. So again, thank you for joining today. Please go to the website and sign up for a time. We look forward to helping you.